Big news, folks, just hitting the tape this morning. OPEC Plus has just agreed to cut oil production by 2 million barrels per day. That's something we've been talking about on this channel for a couple of days now. We knew a production cut was coming. Now they're saying here the actual reduction will be smaller as several members are already missing targets. That's also something we've been talking about here. OPEC is way behind on their production targets. Last month, for example, they missed their oil production by 3.5 million barrels per day. So the fact that they're lowering the target by 2 million barrels now, it doesn't mean actually 2 million barrels of oil is leaving the market. The actual reduction will be less. Now, this is a very big message being sent by OPEC Plus to Western leaders right now. Number one, attacks on energy infrastructure such as pipelines will not be tolerated. Number two, you do not set the price, we set the price. Keep in mind that Europe and the United States have been talking about price caps on Russian oil. And also keep in mind the United States has been dumping 1 million barrels per day of oil from the Strategic Petroleum Reserve to try to suppress oil prices. Well, OPEC is saying it doesn't matter what you do with your Strategic Petroleum Reserve because we'll just cut our production and you're going to run out of oil before we run out of money. The cartel seeks to halt the oil price slide as the economy weakens. Reading on from this article here, OPEC Plus agreed to cut its collective output limit by 2 million barrels per day, delegates said, as the group seeks to halt a slide in oil prices caused by the weakening global economy. It's the biggest reduction by the Organization of Petroleum Exporting Countries and its allies since 2020. Remember, they had a big production cut as a result of the unfortunate health situation, but the cuts will have a smaller impact on global supply than the headline number suggests. Several member countries are already pumping well below their quotas, meaning they would already be in compliance with their new limits without having to reduce production. A cut of 2 million barrels per day in the group's output target, shared pro rata, would require just 8 countries to curb actual production and deliver a real reduction of about 880,000 barrels a day, according to Bloomberg calculations based on September output figures. So according to Bloomberg, 880,000 barrels a day, that's much more palatable than 2 million barrels a day, but still that is a significant tightness in oil markets. And also keep in mind the United States cannot continue dumping the Strategic Petroleum Reserve forever. That is set to end at the beginning of November, conveniently timed just after the midterm elections. So if you add this 880,000 barrels per day to the 1 million barrels per day that are no longer going to be sold into the market, looks like higher oil prices are coming, and they're coming fast. So markets are still digesting this news. Oil prices were higher this morning. They sold off on the news a little bit. You would expect a little bit of volatility right now, but suffice it to say, higher oil prices are coming, folks. I did a video a couple of days ago calling the bottom in oil, and this was one major ingredient to that. Now, when I made that video, I said 1 million barrels a day would be a big cut. Well, they just cut by 2 million barrels a day. And also keep in mind, this will have a big effect on inflation. The only reason we've had slightly lower CPI reports for the last 2 months is because gasoline and oil and energy prices have come down somewhat over the course of the summer. That trend is now going to reverse. And when you combine this oil production cut with the fact that it's about to get cold in Europe and the absolute circus that's going on in European energy markets right now, you better believe that energy inflation is going to come roaring back this fall, folks. So get ready for higher energy prices, get ready for higher inflation reports, and if you're one of those folks who thinks the Federal Reserve is going to ease off on their tightening schedule because inflation has come down just a little bit, you got another thing coming because higher energy prices also means we're going to get an aggressive Federal Reserve for longer. We'll keep an eye on this story and bring you updates as they come in. And until next time, live small and dream big.